Hey everyone, welcome to another video. In financial year 24-25, there had been a total of 15,283 cases of GST frauds in the country, which amount to a total of 2.23 lakh crores worth of money. Out of this, around 58,772 of 59,000 crores relates to GST frauds based on the input tax credit or ITC concept, which is the concept in GST. And therefore, in this particular video, we'll try and understand the basic mechanism of how a common input tax credit ITC fraud is committed. So let's do a deep dive in understanding this mechanism and understand initially the concept of ITC. Well, in the entire story of GST, you have three bodies operating to unearth a GST fraud. To start with, you have the CBIC, or the Central Board of Indirect Tax and Customs. This is the GST department sending out the first set of notices to the taxpayer. And then once the fraud becomes grave, it becomes big, you have the Directorate General of GST Intelligence, which is in each particular state going after the high value, highly sensitive material GST fraud cases. They join hands with the Economic Offences Wing and try to unearth the entire GST fraud. So you have these three bodies working together in tandem with each other, trying to unearth a particular GST fraud. Now, before we look into the working mechanism, as said before, let's try and understand the basic concept of ITC. Well, ITC is a beneficial concept in GST, and to understand this, let's take the help of an example. Say you have a wholesaler, you have a retailer, and then you have an ultimate consumer. The wholesaler is selling goods to retailer. The value, let's say, for example, is rupees 100, on which he will charge 18% GST running rate, and that is 118 rupees. The retailer will have to pay this 118 rupees to the wholesaler. The retailer will then use the same goods and then sell it to the consumer at the base value rupees 200. It will add 36 rupees of GST because 18% of 200 is 36, and the final price the consumer will pay is rupees 236. Now the question is that what is the tax the retailer will pay to the government? Will the retailer pay the GST collected, the entire GST collected from the customer? The answer is no. The retailer need not pay the entire 36 rupees because it had initially paid 18 rupees on its first transaction. That is basically the purchase tax. So retailer gets the benefit of something called as input tax credit or ITC, wherein it is able to use the benefit of the tax initially paid on its purchases against the tax paid on its sale of rupees 200. So 36 minus 18, net amount it has to pay to the government is only rupees 18 and not rupees 36. Therefore, a recipient, once the recipient purchases, it will have to pay purchase tax, it gets the services or goods, will want more ITC to be utilized because the net amount of tax final that is payable to the government becomes less. So more ITC, lesser is the amount of tax that is payable to the GST department. So having understood this beneficial concept of ITC, let us now do a deep dive into understanding the working mechanism of how a common GST ITC fraud is committed. So we have three parties in picture. We have the first party, which is basically a housekeeping agency providing housekeeping services. Then you have an individual consumer, or you can say a recipient. He is trying to procure housekeeping services for his individual purposes. And then you have a third person, which is basically a company, let's say a company into financial services or insurance, for example. And let's assume that in this entire scenario of the GST fraud mechanism, the housekeeping agency and the company are friends, are relatives, are colluding with each other to commit the GST fraud. They are working in consensus with each other to commit the GST fraud. So in the first transaction, the housekeeping services is providing housekeeping agency is providing housekeeping services to the individual consumer worth rupees 10 lakhs. Once the services have been delivered, work is done, the consumer says that okay, the individual says that now raise a GST, now raise an invoice on me. The housekeeping agency says that, sir, look, we have two options. One, we can raise a GST invoice on you, no problem, but you'll have to pay not 10 lakhs, you'll have to pay 10 lakhs plus 1.8 lakhs because 18% of 10 lakhs is 1.8 lakhs. So if I were to raise a GST invoice on you, the housekeeping services agency to the individual person, then I'll have to raise a GST invoice, I'll have to charge GST, and you'll end up paying not 10 lakhs, 11 lakh 80,000 rupees. So this particular individual says that, hang on, that is quite expensive, and what will I do with GST, because I'm an individual, I'm not registered, I cannot utilize the ITC that I get or the purchase tax I pay to you. Therefore, don't raise a GST invoice. I'll go with your second option. I will pay the entire rupees 10 lakhs in cash to you, and whenever you want, raise the cash bill on me. So this person is happy because he gets a saving of 1.8 lakhs of GST. Otherwise, he will have to pay that and not utilize it. The housekeeping agency gets the rupees 10 lakhs in cash, keeps it in its pocket for the time being. And mind you, it has not raised a valid GST invoice to this particular individual. Now, what the housekeeping agency does is that it will find a person like this particular company, and this particular company's need is different. This particular company says that, look, I have a lot of tax I need to pay this month. I need to lower the tax somehow because my cash flow is affected. I need a lot of ITC, a lot of input tax credit. Therefore, you are my friend. Can you help me? Because I don't want housekeeping services. I don't want to pay any money for the services value that you're giving, but I want ITC. Can you raise a bill on me? The company's request is adhered to by the housekeeping agency. The housekeeping agency says, sir, I have a solution for everything. What I will do is that in a previous sale, I had delivered services to this particular person. I did not raise an invoice. I had got cash rupees 10 lakhs. What I will do is that I will raise a valid GST invoice, a B2B, a GST invoice on you with a total value of rupees 10 lakhs, where you backwork, we can get taxable value of 8 lakh 47, and 18% of that is 1 lakh 52. I will give you a GST invoice of rupees 10 lakhs with a value of 8.47 lakhs and a GST of and a purchase tax GST of 1.52 lakhs. I will give it to you. I'm not going to deliver services because you don't want services. I'm giving you the invoice. What you do is that to show it is a valid transaction, you pay me the 10 lakhs through an online mode, through bank. Make it clean, make it look like you have got an invoice, you have got services are complete, you're making a payment to me in bank, through bank. I will withdraw this 10 lakhs in cash and I will prepay this 10 lakhs in cash to you. But wait, because I'm getting involved in this risky transaction, I will deduct my cut. I will take my cut, which is basically commission of 50,000 rupees for the entire value. The company says, wow, because I'm getting a bill, I can show that to my accounts team. I can get the input tax credit to 1.52 lakhs because I've got a bill. It looks like I've got the services because I'm making a payment of 10 lakhs through an online mode and I'm accounting for it. But under the table, I'm getting cash rupees 10 lakhs, so therefore net outflow is nil. But okay, he's taking a commission from me of 50,000 rupees. He'll deduct that and pay the rest of the money of 10 lakh minus 50,000 rupees to me. So my ultimate outflow is only 50,000 rupees, but I get the benefit of input tax credit. So therefore, the housekeeping agency, having not raised a bill in the first transaction, but delivered services, raises a fake invoice of rupees 10 lakhs on this particular company. Services have not been delivered, housekeeping services have not been delivered. The company pays rupees 10 lakhs legitimately through online mode. Cash is paid after deducting 50,000 from the housekeeping agency back to the company. So if you look at the companies, from the company's perspective, it gets great savings because one, it gets input tax credit of 1,52,542, which is basically the 18% on that value or shown in the invoice. It can utilize against the output tax. The company, because it gets a valid invoice, it's made a payment, it can claim an income tax deduction of, let's say, 30% of the entire expense of 8,47,000. Under Income Tax Act, it gets a deduction of 2.54 lakhs approximately. But yes, the company will have to incur 50,000 as commission. Nonetheless, the company gets a total benefit of 3,56,779. ITC plus tax savings minus commission, 3,56,000. So in this way, I get the ITC commission. I get the ITC benefit. I don't have to pay a single rupee. Yes, 50,000 is the only cut that he deducts, and I get the remaining amount. As far as the housekeeping agency is concerned, on the initial 10 lakhs it got in cash from the first person. It is raising an invoice on another person and paying GST on this 10 lakhs to the government, so that is okay. But at the end of the day, it's getting a commission of 50,000 rupees in cash after this particular transaction takes place. Now, this could be one such invoice. Similarly, it could be multiple invoices being raised by the housekeeping agency, different people. Now, in this way, all three people are happy. You have the individual happy because he's saving GST 1.8 lakhs. You have the housekeeping agency happy because he gets a commission under the table for 50,000 rupees in cash. You have the company extremely happy because it gets an overall savings of 3.56 lakhs, which includes the GST input tax credit of 1.52 lakhs. This is how a basic common mechanism of ITC fraud takes place. Of course, today's frauds are much more complex with multiple transactions, multiple layers, multiple subsidiary holding companies and all that. But yes, as far as the department is concerned, it gets the GST on 8.45 or 47 lakhs from the housekeeping agency. But the input tax credit that the company avails is a fake credit, which is only substantiated by this particular fake invoice, because internally no services have been delivered. Money which was received has been paid back after deducting commission. So this is how a normal ITC fraud takes place. And in today's scenario, you have a lot of tech improvements in the GST portal to stop this to a great extent, but still you have ITC frauds taking place constantly in the country. Well, I hope I was able to make things clear through this particular video. If you like the video, you could show support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.